Siddharth Khemka also joins us in the discussion. Siddharth, what's the view on defense now? Because, of course, they've gone through their correction. Do you think they are in the buying zone right now, or would it take a bit more correction to enter that area?
Yeah, hi, good afternoon. So, Anisha, if you look at the overall defense space, the sector is poised for a structural growth over the next 5-10 years. So, we see any decline that we saw in some of these high beta names in the past few weeks as a good entry opportunity for long-term investors. You must also bear in mind that the order book for some of these companies are at almost record highs, and the order book stands for the next 5-6 years. So the execution, which has picked up pace in the last few years, will continue. Some of them will add more capacity. Plus, we are seeing consistently government adding on to the list of indigenously produced equipments, plus consistently giving orders for the defense space. So yes, I think we are positive on defense, and any such correction in the market would be only used as an entry opportunity to add gradually. Given that in the last few years, some of these stocks have moved up sharply. I would suggest not lapping up everything in one go, but pacing it up and adding it in tranches.
Right, okay, that's that on defense. In the meantime, some of the other active movers, and I want to check in what an AU Small Finance Bank is up to. It submitted an application to the RBI to transition from a small finance bank to a universal bank. The stock started off the day well, and it's only managed to build on since then. 2% higher is where that stock is currently. Mankind Pharma also may be, one such case in point, which is going to be in focus. Other than that, of course, we've been talking about the buzzers. There's a Biocon, Berger, Granules, Asian Paints, HPCL. They're all holding quite smartly in trade right now. But Naresh, just want to revisit what the crude sensitives, other than paints, but even in HPBP, which don't technically have reason to move up on the crude cool off, but they've been on a tear. Naresh? The OMCs on the charts?
OMCs look promising, because if you look at it, the way Brent crude is shaping up, it looks like a possible breakdown. Even if not a breakdown, does not look like a case where it will jump up to 90 in a jiffy. Then you look at charts, we are seeing BPCL break out. We've seen HPCL do really well. IOC is the one which is interesting, which is yet to break out into fresh 52-week highs. So at current levels, IOC looks the most interesting one in terms of risk reward. Second is BPCL, and third would be HPCL. But the structure is positive. It's a multi-year breakout, and they've consolidated for a long period of time in terms of return. So positive on the whole sector, and I've been for some time now.
GC, let's bring up that stock as well, because lower crude would definitely mean lower earnings for them, unlike the OMCs. And a $5 drop in oil prices would decrease the EPS for both ONGC as well as Oil India by about 7 to 12% respectively. ONGC 2.5% lower right now. Oil India also will just come up for you on your screens next. And I think that also has been under pressure today. Yeah, that stock sharply lower, in fact, at the session lows, 6.5% lower, and still falling further as we speak. Shrikant, since you're anticipating further lower levels on crude, tell me whether this ONGC mega rally, which was in place, that's going to get stalled for a while?
Say, like for ONGC, it is into multi-year breakout. Like it was around some 300, 320 levels. Between 2014 and 15 years, and that time it was like it was completely depending upon the movement of the crude. But this time it is completely, I'm going to say, it is not like only depending on the overall entire move of crude. There are like number of other businesses in which ONGC is involved. So I'm of the view that it is an opportunity for traders, investors to grab this particular stock close to its all-time previous all-time highs. I'm going to say around 310, 315 levels. I think currently it is around, it is trading around the same levels. And from here again, the stock can bounce back to the levels of maybe 355 or 360. But in the long run, I'm expecting stock to move towards 400. So because of this particular reason, the stock is falling, but it will be an opportunity to grab even at current levels.
Point taken, but it's not just crude which has taken a bit of a slip. If you look at the rest of the industrial metals as well, they too have taken quite a bit of knock overnight as well as over the last couple of weeks. But there is a bit of a silver lining coming in for the Indian steel manufacturers, because if you go by the word coming in from Steel Minister, there could be a potential hike in the import duty so that the dumping from China actually gets stems a bit. In fact, Siddharth, what's your view on metals as a pack, steel companies, etc.? And then we'll play the soundbite of the minister as well.
Yeah, Anisha. So if you look at metals, I think they are witnessing some recovery on back of the expectation that the global interest rate cycle will turn for better, and with the interest rate cut and the dollar index going down, I think demand for metals globally should improve with economic growth. Yes, on the given the commodity nature, the sector does witness intermittent volatility. But from here on, we are expecting things to improve, and especially the ferrous and non-ferrous. We are positive more on the non-ferrous side, where Hindalco is our preferred pick. Even on the ferrous side, we believe something like a JSW Steel and SAIL, they could do well. But yes, in the interim, there could be fall, which could be an opportunity to add for investors.
The way in which China dumping the steel to the country, all our industry, you are in actually some kind of terrorist-like thing, I think, according to me, from China. From last 2 months, several times our friends came and met me. What are all the problems they are facing in this actually growth of our steel industry? About the China's issues, I can understand. I will promise you that the problem which you are facing from the China, for that actually I try to convince our Prime Minister and Finance Ministry to look after about the from 7.5% tax to 10 to 12% your demand is there. For that, definitely I will going to try to convince and to bail out the present problem which our steel industry facing in India.
Domestic steel industry's growth is going to be affected if imports do sustain at the current pace. That's also the word coming in from ArcelorMittal's Dilip Oomen, who also added that they've requested the government to impose duty amidst the threat of further dumping in the country.
We just have to see what the other countries have done, what US has done, what Canada has done, what European Union is doing, what Southeast Asian countries are doing. We have to repeat that. Basically, anti-dumping or an anti-dumping duty, increase of BCD. These are some of the.
So what would be the quantum, sir, as far as?
No, that is for the government to decide. That is for the. But the problem is that if the imports continue as it's happening now, the steel industry will not be able to expand. We have to grow. This per capita steel consumption in India is only 95 as compared to 230 average worldwide, globally. So we have to grow a long way. But how can you grow if you are in the red? If you're not making profits, how will you reinvest? And also you have to reinvest for climate change. You have to decarbonize as well. So that's the point.
So you also spoke about the demand-supply scenario, the reduction in prices vis-a-vis input costs. So any specific thing that you are...
Yeah, it's just that, the input costs have not come down as in proportion to the steel prices, the way it has come down.
That's the latest coming in as far as the metal industry is concerned. But Siddharth, there's also this clamor around FAME 3, right? And that entire discussion whether it will happen, not happen. For now, we're expecting that relief will happen for some of the EV companies. Overall, is there any play left as far as that entire EV transition is concerned, or do you think most of it is well discovered now?
Yeah, Anisha, I think EVs are still going strong, and especially if you look at the penetration in the three-wheeler space, in the passenger vehicle, two-wheelers, and the two-wheeler space, that is where bulk of penetration will happen. Two-wheelers, we are seeing strong offtake, especially because of the FAME subsidy that the government has been providing. Until the actual cost of production comes down, the subsidy will have to be maintained for the steady adoption of EV two-wheelers. At the same time, there will be a gradual, you can say, adoption of EVs in the passenger vehicle segment also, where some of the players are now planning to launch. Even on the hybrid side, Maruti has got the technology and is doing well. So for us, what we believe is that on the EV side, two-wheelers are the best bet for now, where among the listed players, TVS Motors is better placed. Ola, we don't have a rating right now, but again, in terms of pure business growth, they will also do well. And in the overall passenger vehicle segment, we believe Tata Motors is the best play to look at from a EV perspective.
Okay, that's the best play when it comes to the EV play. That's Tata Motors, of course, a whole host of auto anchors as well, which have a more concentrated EV linkage too. But in the meantime, just looking at the screen right now, and let's bring up what the Nifty Bank is up to, because that underperformance clearly stays. So I just wanted your thoughts on, banks, because we've seen the underperformance, we've seen the credit growth concerns. Where is it all leading to from an investment perspective?
Yeah, definitely. That is one sector that keeps on in the limelight and has been underperforming in the past couple of quarters. So what we see is that I think from here on the NIMs would kind of improve. Yes, there has been some pressure, especially on the business growth, both on the lending as well as on the deposit side. A bigger concern has been on the deposits, where some of the large banks have been unable to grow the deposits in sync with the credit growth. What we are expecting is there would be a steady 12-13% credit growth. NIMs will stabilize and improve from here on. And again, in terms of sectoral preference, what we are liking is the public sector banks, where earnings momentum would remain steady, asset quality has been pretty strong, and valuations are still comfortable. In private banks, business growth has been a bit tepid, and margin pressure has continued. So among the private banks, only ICICI saw a very healthy growth in terms of earnings as well as in terms of credit growth, which is our preferred pick. In terms of public sector banks, SBI is our preferred pick, followed by PNB in the public sector space.
Recommendations as far as some of the financials are concerned. Case in point being SBI, which has actually moved up in the last few minutes, so tracking that one. But I think since we're talking about the banking sector, maybe we can take it across to Gaurav to get a better understanding as to what the overall universal banking will mean for the EU Small Finance Bank. We'll get to that in a bit, but before that, let's take the BTSC trades. Naresh, what's the buy today, sell tomorrow idea, if any?
So first is a buy on Hindustan Unilever. The stock is on verge of a fresh breakout. Did a new 52-week high. Stop loss at 28.10. Target price of 2900. Second is a buy on HDFC MG. Strong relative strength here as well. Stop loss at 44.60. Target price of 4600.
Shrikant, any top bets as a BTSC trade or the STBT trade?
Yeah, I think there are a number of stocks which are really doing well, and they are crossing their important levels, even though the market is is not in that great shape. But yeah, there are a number of companies which are really doing well in that space. In that particular basket, if we see any particular stock, then Biocon is crossing its important resistance level, which was around some 375, 378, and the stock has spent almost year below these levels, but now it is about to cross this level. So based on its technical formation, I am of the view that very shortly the stock can move to the levels of 400. It's a buy at current levels with a stop loss close to 370, 368 on the downside. The other stock which we like is Grasim, and there also we are seeing that it is forming higher top, higher bottom series. Today it is around 2760, but technical formation is indicating us that it is about to retest its previous high of 2870.75 or maybe even 2950. So Grasim is also a buy at current levels with a stop loss close to 2640 on the downside.
We're just talking about AU Small Finance Bank. That's been in focus. They've applied to the Reserve Bank for a voluntary transition from a small finance bank to now a universal bank. In fact, Gaurav is here to explain what exactly would this transition imply. Gaurav?
Well, yes, AU Small Finance Bank has now applied for universal banking transition from the Small Finance Bank to RBI. And now let's look at the scenario analysis as how this can play for AU Small Finance Bank. So there are three factors which will definitely play out for the bank. First one is the priority sector lending. So when we talk about small finance banks, they're required to give around 75% of the total credits to priority sector. But as a universal bank, this ratio will come down almost to 40%. Now this gives new avenues for the credit for AU Small Finance Bank, and at the same time, this will also generate some kind of extra return when we talk about the other credit facilities. Next, let's talk about cost of funds, because as a small finance bank, we also know that when investors and as well as the depositors demand for high deposit costs, and that is the reason why the cost of fund for small finance bank is a little higher. But when we talk about universal banking, this cost of fund is also likely to go down. Now scenario analysis suggests that, and Investec also suggests that this could go as low as 20 basis point. I mean, the cost of funds could go down by 20 basis point, and there also we may see some ROE upliftment for AU Small Finance Bank. And lastly, when we talk about capital requirements, usually small finance bank are required to keep around 15% of the capital adequacy ratio, but when it is transformed into universal banking, it may come down almost to 11.5%. So there again, we may see some headroom for growth for AU Small Finance Bank. Overall, we may see ROE upliftment somewhere in the tune of 400 basis point if RBI allows AU Small Finance Bank to convert into universal banking. Let's not forget that we have already seen that AU Small Finance Bank advances have grown almost by 33% over FY28 to FY24, FY18 to FY24. And when we talk about the Q1 FY25, there also we saw some strong growth. Advances are already reaching around 1 lakh crore rupees. We already have that AU Small Finance Bank is reaching around 2,400 touch points. So we may see some increase there as well. And another point to keep here is that this will also set a benchmark for another universal small finance bank for the conversion to universal bank. So we already know that Ujjivan Small Finance Bank was also in talks to apply for universal banking in FY25. We have other banks as well. So this will be a benchmark as how these banks can also go forward for universal banking. So definitely a positive news, not only for AU Small Finance Bank, but also for other players as well, now that AU Small Finance Bank has applied for universal banking.
Right. Okay, Gaurav, we'll leave it at that. In fact, let's check in on some of the charts as well. Naresh, now that at least, we don't know how long this global weakness is going to last, but assuming there's no deeper damage in store for us, considering that we are already resilient as opposed to our global peers, do you continue to see underperformance from Nifty Bank?
So for now, yes, the underperformance continues. As of now, we are not seeing price action in any of the heavyweights in the bank Nifty. We just see ICICI Bank taking lead. The rest of the names are actually totally sideways. So if we see some price action change happening in either of them, then maybe we change the view. For now, the underperformance continues.
That's the word coming in on the banking index. But Siddharth, since you talked about how a lot of stocks from the broader markets are still looking ripe for a bit of an up move, what would be the top 2-3 names that come to mind?
Yeah, I think one stock that is our preferred pick is in the EMS space, which is Kaynes Technologies. The company has recently got the government approval or the cabinet approval to set up the semiconductor plant in Gujarat. Apart from that, it has recently also set up a new manufacturing facility in Hyderabad dedicated towards smart meters. So what we are seeing is that apart from the strong growth in the core electronic manufacturing, the company is gradually diversifying it into newer products, which are not only high growth, but are niche in demand, and that should lead to strong growth. So it has also formed some of the technological tie-ups with some of the global players, for example, Bright Grid Technologies or the Light Speed Photonics to strengthen its footprints in the semiconductor. And we believe that going forward, semiconductor would be a strong growth focus area for Kaynes. Even before that, we are expecting a strong growth in the core business for the next 2 years. Our anticipation is about 67% earnings growth, which should drive the stock price. We have a buy rating on Kaynes and a target price of 6,000.
The stock to watch out for, Keynes Technology, from the entire EMS vertical. Recently, they did get some of the approvals as well on the PLI, so that's something that might just work out better for that stock. What else is happening in the market? Of course, CCL products continues to do well. Piramal Pharma, Jubilant Ingrevia, the defense names. In fact, Prestige Estate is also doing quite well. You had a couple of other names as well from the entire real estate pack that had managed to do some QIPs as well. What's the view on real estate right now, Siddharth? Because there was the expectation that it has perhaps peaked out and some of these companies are now coming up with fresh QIPs, taking fresh money so that they can create the land pool, etc. for the next cycle, it seems.
Yeah. So I think real estate, the long-term thesis continues because if you look at the pre-sales has been pretty strong. Yes, we have seen the cycle doing well for last 3 years, and there is some fatigue in terms of growth on a Y-on-Y basis. But what we are seeing is that the double-digit growth remains intact for the entire real estate space. The new supply or the launches are now being controlled, and we are seeing fewer launches, which is leading to the prices or realization being continuously strong. And overall, we believe that the FY25 pre-sales would remain strong for this year, and we see continuous re-rating potential in companies on back of the strong business. Plus the balance sheets, which have improved a lot. So we are seeing a lot of cash flows improvement in some of these companies. What also we are liking is that from the, you can say the luxury segment, which was doing well, the mid segment will start doing well with the expected rate cut in the next few months. And that would also drive a lot of these mid residential players. Our preferred pick would be Godrej Properties, Prestige Estates, and Sobha Developers within the real estate pack.
Right, okay, that's the realty pack, and that's where Siddharth is seeing opportunity right now. Siddharth, anything else wherein you're bullish and recommending buying in this market?
Consumer space is something that we believe in this market could do well. Monsoon has been good. We are seeing commentaries from a lot of managements about rural sector growth improving after the elections, and also with monsoon doing very well. So our preferred pick within the FMCG space is Godrej Consumer. The company has adopted a growth-oriented strategy, which includes acquisition, cross-selling, entering new segments, and also redefining its target market, so the TAM for its existing products. That is helping it improve its growth. Overall volume growth, the company is targeting high single-digit volume growth in FY25 in India, and is looking at an EBITDA margins in the mid to high 20s. So that should be very positive. We expect the earnings growth for Godrej Properties to be the strongest among its peers. We are forecasting an 18% PAT CAGR and margins to expand by 100 basis points. So that's a buy with a target price of 1700.
Godrej Consumer, that's the name to watch out for on the consumption pack. But Naresh, what's the view on Biocon? That stock has managed to get charged up right now, and UPL as well. It of course is a positive news to back the move with respect to the value unlocking that is expected at one of their arms. But on the charts, what will be the recommendation for UPL and Biocon?
So Biocon looks interesting in terms of the price volume action which has happened in the last couple of hours. Also, the last high for the stock was around this 377 mark. The last time it was at 380 was back in 2021 into 2022. So looks like a major momentum shift, and the trend has been up for quite some time now. Looks like a breakout could surprise on the upside. UPL similarly is a bottoming out case wherein the stock has consolidated and corrected over the last 2 years. Sustaining above 600 would be a short-term breakout, would give an upside towards 660 levels.
We'll let you all go on that note. Siddharth, good to have you on the show. Shrikant, Naresh, good to speak with you guys as well. Let's begin.
If you like this video, then like, share and subscribe to ET Now.